Hello and welcome to the Bitcoinlens podcast. Today is episode 8, and I wanted to talk about Bitcoin versus crypto. Since many people have asked me, like, listen, can you do an episode on this? You know, they hear a lot about Bitcoin, they hear a lot about crypto, altcoins, NFTs, and it kind of is convoluted, and they're not sure if it's the same, if it's different, what's different. You know, how are we supposed to make a discrepancy between all these different things? So that kind of is where this episode stemmed from. So I wanted to kind of go over how Bitcoin compares to what is referred to out in the wild as altcoins, NFTs, and just cryptocurrency. So first of all, Bitcoin itself is a cryptocurrency. It is a fungible cryptocurrency, which means it can be exchanged for something else, a hard currency, where we have NFTs, for instance. NFTs are going to be non fungible tokens. So you have your Bitcoin, you have your altcoins, and those are both fungible cryptocurrencies or fungible tokens, which can be exchanged for hard currency. And then you have your NFTs, which, you know, those can't really be traded for hard currency. It could be sold in exchange for your currency, but NFTs are essentially like digital art. So it's basically a digital piece of art that gives you that unique, you know, computational value that shows that you are associated or attributed to that piece of art that you purchased. And there's different NFT marketplaces. You know, altcoins is a little bit different. Altcoins are essentially, you know, it's also a form of cryptocurrencies. Alternative coins is what that stands for, and it's alternative to Bitcoin. Since Bitcoin is the initial cryptocurrency and the initial blockchain, altcoins stemmed from that, and then NFTs stemmed from that much later in the early 2020s. So, you know, another thing to think of is kind of most Bitcoiners, they go through this journey. And if you've been in Bitcoin for a long time, you know, unless you just, you know, hit the jackpot, you understood Bitcoin from the get go. Most Bitcoiners started with altcoins. So, myself as well, my personal journey, I started with a cryptocurrency called Substratum. And then I went to Bitcoin. And, you know, so it was kind of wild. Like everyone had different cryptocurrencies, different strategies for investing. But honestly, for me, it just came down to I researched something, then I researched the next thing, then I researched the next thing. So I went from Substratum to Bitcoin to XRP to Nano to Cardano. And then I ended up with NFTs. And then finally, I came back to Bitcoin, which was last year. So this is obviously, you know, if you've watched my previous episodes, you understand why I'm really a believer and a maximalist when it comes to Bitcoin. But, you know, having said that, I still wanted to go through these things and just kind of explain what they are, what are altcoins, what are NFTs, what's cryptocurrency, and what's Bitcoin. So just to summarize what I quickly said, Bitcoin by itself is a cryptocurrency. You have various cryptocurrencies, and the alternative cryptocurrencies are called altcoins that are not Bitcoin. And then you have NFTs, which is a non fungible token. So basically, the opposite of what Bitcoin and altcoins are, since it's non fungible and it can't be traded for other currencies. So, just an example of some of these altcoins and what they are. There's just to kind of give you a little bit of perspective, there are over 14,000 altcoin projects. So a lot of altcoin projects. There's over 1,000 NFT projects. There are multiple thousands of NFT projects, and most of these fail. So if you have ever heard of an altcoin project, you've also probably heard of another 20 that's failed. And that is just because a lot of these are money grabbing projects and there's not really any substance about them. You know, you look at something like Substratum basically allows folks, and I actually used to use this. Like I said, Substratum allows you to, you know, use some of your spare compute, and it helps to, it's basically essential. Its mission was to help decentralize the web. So you could allocate some of your spare compute or your computing power, meaning just giving up some of your computer's resources to help decentralize the web. You look at XRP, was another cryptocurrency I was involved with, and this one tries to solve some of the payment issues, especially when it comes to Swift. So XRP tries to have or allow you to transfer very big transfers of money or big amounts of money in a very short time with low transaction fees over a very long distance, which obviously is not as efficient with Swift payment systems like we are used to in the traditional banking system. Then you look at Nano, and Nano essentially did try to do the same thing, and it's pretty decent at it. As far as like solving just the payment problem. So solving very niche problems here, solving the payment problem, solving low transaction fees, and solving distance. So time, distance, transaction fees, and amounts. These try to solve. Then you look at Ethereum, which most of you probably know about. So Ethereum, it allows developers to deploy smart contracts, to build decentralized applications. And essentially what Ethereum tries to do is basically tries to decentralize control, tries to avoid fraud, and allows all these utilities to be built with these things in mind. Cardano was also something that I evolved to back in the day in the late 2000 teens, 2017, I believe. I got into Cardano, and that was another one where it essentially just tried to improve some of the things that Ethereum did with more scalability, better governance, and better consensus algorithm, etc. So that's a few of the ones. Solana is another one you may have heard of, and this is another proof of stake network, and it kind of works similarly to Ethereum, also has smart contracts, and also has a crypto that lives on top of that called Sol. So all of these have, they have their blockchain. Some of them don't have their own blockchain. They're built onto other blockchains like Ethereum. But all of them have typically a coin that's associated with, like Cardano, you'll have ADA. ADA is the coin that lives on top of it. Ethereum, you have ETH, and then Solana, you have SOL. So, and then Nano and all those other ones have the same. They also have their own tokens. So, some of the popular NFT projects, if you've heard of NFTs, so once again, the non fungible tokens, just a reminder, this is the digital art of cryptocurrency essentially. Some of the big ones, you've got CryptoPunks, you've got Bored Ape Yacht Club, Pudgy Penguins, Laid Back Llamas. So this is essentially art that you can buy, and creators go onto these marketplaces and they make art, they make digital art, and then these pieces of art have unique hashes associated to them. And to put a hash simply, it's essentially just a computational value that's assigned to that piece of art, which can then be attributed to you when you purchase that, and can also be tracked nicely when you sell that specific art on the web. And so, these pieces of art, there was a huge boom in the NFT market in 2021 where NFTs were up to, I believe there were 2 million users. So just over 2 million users in 2021. And then you look at 2024 and there's barely, like, I don't even think there's 200,000 last time I checked. There's not even 200,000 users in the NFT marketplace right now. So that market has really taken a big dump downwards. And just to kind of give you an idea before I move on from these NFTs, is there's been items, I believe there was one NFT that sold for $91 million. Some of these the CryptoPunk project, I know they've got items that's over $1 million, or used to have some of over $1 million. The Bored Ape Yacht Club, where they sell these interesting looking apes, different characters, different types of apes, pulling their faces funny, or maybe having a weird object in their hand, maybe smoking, drinking, maybe have some interesting chains or jewelry, things like that around them. And some of these went for over a million, and multiple of those went for over millions of dollars. So some really interesting things there. Some creators, some real world artists also try to jump in there, try to, leverage the NFT world to try and sell digital property in, like, call it their digital neighborhood, where you could essentially have access to them. And this could give you access to concerts, like real world concerts, if you lived in this specific digital stratosphere. And then there was also some other things I've seen where, and I believe in New York, I've seen a place called, it was some kind of fish market where you could actually only access this, sushi restaurant if you owned an NFT in their project. So some creative things there that I've seen, but ultimately the NFT market have really crashed. And the altcoin market has also really crashed a lot. So I will go over some of these things, but so what makes, I guess the important question here is, what makes Bitcoin different than altcoins and NFTs? And one of the things that I would definitely say is the lifespan. First of all, the first point I would make here is the lifespan. You look at Bitcoin, it's been around for 16 years now, tried and tested, and it's still around. Versus you look at altcoin lifespan, the average project in the altcoin space lasts about 3 years. I believe for NFTs, it's way lower. I think it's less than a year for NFT projects. So these are some really interesting numbers, and there's very few altcoins that have really stood the test of time, even though none of them are as old as Bitcoin. Most of them are 10 years old max. Some of the ones that have made it are 10 years max. And out of that bucket of those that have been around for about 10 years, very few have lasted. So a very, very small percentage, less than 1%, have actually still alive and around and investable, and um, on the blockchain, or on its own blockchain. Now, another big point is proof of work versus proof of stake. So, proof of work, obviously, you have to prove, and we have to validate transactions through mining. And mining requires energy and computational power. And this is arguably what many believers in Bitcoin, including myself, makes Bitcoin so powerful, because it is distributed energy, it is distributed power. You look at proof of stake. Proof of stake essentially is what most of these other big cryptocurrencies are. So, like, Ethereum is a big one, Solana is a big one. These are all proof of stake. And proof of stake, what that essentially means is you have validators of transactions. And in order for you to be a validator, the algorithm randomly decides who are the next validators for the block to validate the transactions. And in order for you to be even in that bucket to be able to be a validator, you need to stake at least a certain amount, depending on which blockchain we're talking about, of that specific cryptocurrency for you to be eligible to be a validator and to be able to be validating transactions in that block, if you will, and be able to stake that cryptocurrency. So everyone can stake, but in order to be a validator, you have to hit a certain threshold for those specific blockchains. So without complicating that too much, it essentially just means you're more likely to become a validator if you have a lot of that cryptocurrency and you have a lot of that specific cryptocurrency staked, which Bitcoin does not have that problem. Bitcoin is all energy, computational power, proof of work, and it's super distributed. Now, another big thing is you look at the proof of work total market cap. So out of all the cryptocurrencies there are proof of work, the total market cap is 1.14 trillion. Bitcoin accounts for almost 100% of that market cap. So let that sink in a little bit. Bitcoin also accounts for about 53% of the total market cap of all cryptocurrencies. So you're looking at one very big proof of work blockchain, and it is pretty much holding up. It's pretty much holding up the whole cryptocurrency industry, including all the different proof of stake blockchains you have out there. So another big factor of what makes Bitcoin different than altcoins and NFTs is energy. So, market cap is monetary energy with Bitcoin. Like I've said in previous podcasts, it's backed by 19.6 gigawatts of energy. That is more than 4 times the entire US Navy. And that is 19, 20 times almost the amount of what a single nuclear power plant generates. You look at it from the compute perspective, this is also fascinating. Bitcoin is backed by 786 exahash of computing power. And this is driven by ASICs processors, which is it's thousands. I believe it's 2,200 times more efficient than your regular GPUs. All the computing power of the world is essentially not even 10% of what the Bitcoin network is. You look at Facebook, Amazon, Microsoft, all these massive companies, it doesn't come close. It doesn't even hit double figures in percentage wise of the total Bitcoin compute consumption. And then this leads into security. So this is a big one. Let's look at compare it to the biggest players here. I don't really want to compare it to NFTs because NFTs, most of them just collapsed and that whole market has collapsed. But let's look at the biggest competitor to Bitcoin and you look at Ethereum. Ethereum Classic is the original Ethereum blockchain, and it was created after the DAO hack in 2016. So what happened? A dispute between the Ethereum holders caused a split in the Ethereum community, and basically the majority of them chose to reverse the hack, while Ethereum Classic did not accept the reversal. So to put that pretty simply is they basically reversed the blockchain. So that kind of goes against what Bitcoin stands for. That goes against for what we mean when we say we want some integrity in our blockchain. We don't want a blockchain to be manipulated by, and we don't want centralized figures to be able to do that, when that call comes. So that was a big one. With altcoins in general, if you look away from Ethereum, many of these projects have been hacked. Many of them have been ended by hacks, and some of them have just been ended by some really lackluster security. Obviously, many exchanges have been hacked, but that could affect many different cryptocurrencies. But a lot of these projects, these altcoin projects, have been really ended by hacks. But really, the biggest competitor and the one we really need to focus on here when we compare is Ethereum. And Ethereum did a major reverse of the blockchain when many tokens were lost. Thousands and thousands of Ethereum, I believe it's actually millions of Ethereum, it was lost. And they decided to reverse that. So that's an important point. And not to say that Bitcoin doesn't have any bugs ever. Bitcoin, I've gone over that in some previous podcasts. It's had some bugs, but those bugs have been patched, and Bitcoin has never had the need to reverse the actual blockchain and manipulate the integrity to put it in a state before like a hack or anything. There's been attempted hacks, but nothing has manipulated the blockchain where we're actually in a point where there's no integrity in the blockchain. So that's an important one. And, so basically, just to think of like how does a proof of stake blockchain hack occur, and that essentially happens when the hacker controls or accumulation of hacker controls the majority of the stake. And like I said earlier, that would require them to be the majority of the validators. If the majority of proof of stake holders are, if they're validators and they get picked, I mean, if a lot of them have a ton of staking power and they randomly get picked, then the chances of them being able to manipulate that blockchain goes up exponentially. So very, very different. You're looking at, you can literally buy your way to a point where you can make this thing more insecure. But honestly, I do want to be honest when I compare. I'd say it's still pretty secure. It's just once a hack occurs, how is that handled? That's a big one. The proof of stake. I'm not going to go here. I'm not going to say it's insecure. It's still pretty secure. But as far as like having a centralized entity decide what happens post hack, that's where the problem really arises. And that's where we can have some real problems, like we saw with Ethereum Classic, that whole dispute between their community. So, redundancy is another big one. With proof of work, you have major redundancy via compute and energy, like I talked about. And then with proof of stake, you don't have that much redundancy. And, especially when you actually compare the reality of the state of these blockchains, Bitcoin has thousands and thousands and thousands of miners across the globe. And like I said, they've got 53% of the market cap, which means that is distributed energy, distributed compute, which means redundancy. And unfortunately, none of these other blockchains have that. Now, well, let's look at another factor, namely accessibility. So, why is accessibility important? I really think accessibility is very important because, Bitcoin, you'll have the most support basically because you're going to have the most access to it through exchanges, through wallets, most countries, you're going to have, it's been around for 16 years. You have ETFs. Now, I know Ethereum has an ETF or two now that's been approved. Bitcoin's got multiple ETFs. It's got 11 ETFs and just in the US, and then there's got multiple ETFs throughout the globe. Many people still don't believe Ethereum is actually a commodity, and they see it as a security, which obviously there's going to be completely different regulations depending on how countries rule on that. But securities are usually way more regulated than commodities, so think of that as well, like from an investment perspective, and how jurisdictions locally and throughout the world are going to rule on that. Now, scarcity is another massive thing. We've gone over this, but Bitcoin, 21 million. You look at Ethereum, there's 120 million in supply. You look at ADA or Cardano, that is 45 billion in supply. And you look at another big, competitor, XRP, within its own right there, has 100 billion. So, although none of these really truly compete with Bitcoin, I just wanted to at least, look at some of the bigger players there from a scarcity standpoint. Now, let's look at store of value and investment perspective. So this is kind of an interesting one. So market cap of Bitcoin is 1.1 trillion. Like I said earlier, it's 54% of the total crypto industry. So you're thinking of a store of value, you're thinking of investment. Ethereum is 13% of the crypto industry. And there's roughly 14,000 different altcoins, like I said earlier. So that's a lot of different altcoins. So you got to ask yourself, if something is dominating by that much, it's been around the longest, and all the other factors that have gone over a year and other podcasts, you know, from a store of value and investment perspective, where do you really want to put your money and where do you really feel safe with it? You look at the whole NFT, all the NFT projects out there, their total market cap is 60 billion. So just a tiny fraction of just the one Bitcoin cryptocurrency. You look at Bitcoin average annualized returns just over the last decade. So now in this on this topic, you can really jump into and compare this to the S&P 500, real estate, gold. Pick your favorite commodity, pick your favorite index fund, your favorite stock. 63% AAR over the last 10 years, meaning you have a 60% return on investment every single year for the last decade. So Ethereum, another thing to think of is the price in 2021 was 4,600 for one token. Today it's 2,600. So you're looking at 3 years later, you got $2,000 less value in a single token. Now I know it's been doing pretty well here in the last few months, last year or so, but still that's concerning, right? And so that's a big one when you look at investments, and not even comparing Bitcoin to the other altcoins and NFTs. For me, I don't even compare it to those. I just compare it to real estate, index funds, stocks, commodities, everything you can imagine, art, and this is no comparison. But definitely advise you to go back to my older Bitcoin podcast there on the Bitcoinlens and go check those out. So medium of exchange, it is widely adopted. So obviously it's going to be a way more attractive cryptocurrency when comparing to altcoins to exchange with others. It's been around the longest, once again, 16 years. And like I said earlier, average crypto project has lasted 3 years. So I doubt you want to really rely on using a medium of exchange for something that's averaging 3 years of a lifespan. That's not very reliable. And then for me, the biggest difference between Bitcoin, altcoins, and NFTs is the problem it solves. That is massive. Like Bitcoin actually solves a global problem. I recommend you go specifically listen to my Why Bitcoin episode. but it solves the world monetary problem, the world problem that we see with governments all over the world. We're living in a world of debt generation, in war funding, and printing money and central manipulation. And Bitcoin solves all of that. And that is why we're seeing it last so long, survive so long, and being adopted so widely. You look at the rest of altcoins and NFTs, they solve very niche problems. They can maybe solve, singular or multiple application problems out in, different technical spheres, or NFTs trying to solve easier access to art, which we can see that market has completely collapsed. So don't want to spend too much time on the problems those solve, because it's so niche and it's so limited that you really can't compare to something that's solving a global monetary system. So just a summary before we wrap up here of what's the difference between Bitcoin and altcoin and NFTs for me is, the centralized aspect of it. Bitcoin doesn't have a centralized entity, doesn't have a CEO, doesn't have a board, doesn't have a group of leaders that run it. All these other projects have multiple leaders. You can usually put a name to a project, even Ethereum, Cardano, XRP. There's usually a person you can point to that runs the show there, although they say that they absolutely do. you know, Bitcoin's being most reliable. It's the most adopted, the most widely. It has an actual problem it solves compared to very niche, very limited, and very broken problems the other ones solve. And then, of course, for me, the big one, like I went over, the proof of work is a huge, huge factor compared to proof of stake. Proof of work is way more reliable, decentralized, and secure, in my opinion. And then the altcoins and NFTs, they all overlap. They're all solving the same problems in different ways. And most of them are just money grabbing projects. And most of the vast majority of them, over 90% of them, have collapsed and just faltered. So that is pretty much all I have. I hope that was insightful. Bitcoin versus altcoins versus NFTs, and I definitely advise you to go listen to some of my others if this was interesting to you, and especially the Why Bitcoin episode. But that is all for episode 8, and hope you enjoyed it. I'll see you next time. Thank you.